Hello traders and welcome to another video review. Today is Thursday, July 14th, 2022. Let's start what is going on the financial markets by looking at the Forex calendar. Some data had been published overnight, mostly from Australia and Japan. We got the employment change from the Australia increasing to 88,000, beating the forecast of 30,000. Full employment change down to 52,000 from 69,400. Unemployment rate in Australia drops down 3.5% versus 3.8% expected and 3.9% the last reading. So it looks like the job market in Australia is right now in kind of a good condition, or at least better conditions. Industrial production in Japan down minus 7.5% for the month of May. Last reading minus 4.9%. During the London session, we got the new home sales data from the Australia. We got the PPI from Switzerland, which is decreasing from 0.9% to 0.3%. Bank of England credit conditions survey will be published at 10:30 today. This is of course from the UK. Another speech from the German Buba Mauderer will be posted 20 past 1. And during the New York session, we got the core PPI and PPI data from the US. Of course, PPI should be kept on the same level, 0.8%, as it was before. And then, of course, at at 2:30, we got initial jobless claims. All of this data are from the US. One more data scheduled for release at as usual at 2:30 is manufacturing sales from Canada. The manufacturing sales last reading was 1.7%. This time market forecast is minus 2%. So it might be a very nice dip down in manufacturing sales in Canada. Alright, some data are here already, data from Australia and data from Japan. Some data we are waiting for, but overall it doesn't look like a very busy day. So we should start the technical part from the data published already, which are data from Australia, and then we go to US dollar and the other market related pairs. Let's start with the US dollar, because we got here kind of an invalidation of the recent pattern. If we zoom in, we can clearly see that we got this pin bar here, this pin bar, the red one, looked like a shooting star, unconfirmed, invalidated, right? We got this big green bar here into the extremely overbought market conditions. Then we got another pin bar, so we can even put one more label here, pin bar again, and now the market is testing the level of 108.54, another swing high. And if this bar, this candle will close above 108.5354, of course this pin bar and this pin bar as well is again invalidated, and the market is going up despite the bearish efforts to cap the rally, to make it stop moving up, right? So to provoke a correction or a pullback at least. As you can see, bearish divergence is present. However, with that strong market, we can stay extremely overbought for quite more time, because this market is clearly trending. As you can see, really here we have only minus 3.5% last correction, then 2.26. This is not enough to put the market back into the downtrend. So we are trending in the US dollar index. US dollar is the king. Australian dollar. Very interesting price behavior. Let's just dig in with this. What is going on here is, as you can see, we got a breakout towards 6,717. This is the new low here on the Australian dollar. So we will definitely 6,714. That's even lower. So let's just put our temporary support line here. This is the swing low. The market is trying to bounce, especially after the data. All right, so we got this line here, approximately. Market is trying to bounce. It's being faded. Market is again trying to bounce. We got this long down shadows here. Again, it's being faded. So what is going on here is that we might be very, very close to this market to make some sort of a pullback. Maybe the first target would be 6,831. Of course, this is still a support, 6,767. However, in order to rally, we of course have to break out of the channel and then break above the 6,831, 6,854 level and head towards this trend line. Let me make it thicker so everyone could see. There you go. We need to break above this line in order to rally. And this is very, very, very important for the Australian dollar market right now. So the outlook remains bearish. Momentum confirms the bearish outlook. However, because of the pin bars here, we might have some kind of a rally. We might have some time, some kind of a pullback to the upside. Please watch these levels here. 2 intraday levels are on our chart, so let's see what will happen with this. I think we should take a look on the crude oil. Why? Because of this kind of a price behavior. So we were talking about this pattern here before, and we said that maybe this kind of a pattern looks like a triangle, so the market would try to break to the upside. However, the price of oil was already on a highly elevated levels, and the momentum didn't even hit the level of 70. So this high 130.44, where the blue arrow was made on the very, very, very big momentum. And since then, of course, we dropped over 30%. There was a long in time attempt to rally back on, but the rally was capped, and since then we've been trending lower. Test the lower potential triangle level, bounce 50%, breakout, test and breakout. This is a clear market right now. This is the market that tries to tell us that we might be going even lower on crude oil. So let me just make this channel, because it looks like the market participants respect this channel, and let's see what is going on. Of course, we got this zone of the levels of a support, right? This is the demand zone, so we call it. Let me just put this zone in. Yes, there you go. This is the zone between these levels. This is exactly the zone. As long as we trade above this zone, the outlook remains bullish. However, we just recently tested the lower level of the zone, the level of 93.67, and the market is ready to go even lower, below 93.67. The next target is technical support 85.66. All right, so this is the situation right now on the crude oil. It looks bearish. It looks like this market wants to test the lower levels of the technical support and then break out of this long-term potential triangle, potential consolidation zone towards sub 90 levels. So at the 85.66 is the next target. As you can see, plenty of red candles here, big red candles, bounce, big red candle. So we are waiting for a bounce, big red candle on the oil to the downside. So that's the crude oil. What is Bitcoin doing? Well, Bitcoin again tested the lower channel line. So what do we have here is a clear test, and unfortunately, we broke below this lower channel line. However, this looks like a pin bar. The low was made at 18,905. Okay, that's fine. So it was kind of a few $100 away from 18,640 technical support. We bounced towards the level of 20,000. However, we didn't apparently break it, right? The high was made like 20,400. Okay, so it looks like the market doesn't know what to do right now, and we need to wait for the market to tell us whether it wants to continue the down move after the breakout, or it wants to go back to the channel, and this will be a false breakout to the downside, which means the market will be ready for rally. Okay, the rally higher. Of course, all of these formations, all of these candlestick formations are still valid. We got the pin bar formation here. It looks kind of interesting right now, especially that the market is trying to pick up on the momentum again and break above the level of 50 on the error side. That would be somewhere around this level, 21,864, 22,492. This is the level of 50. This is the neutral level, and a breakout higher would be very, very welcome by bulls, of course. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.